Hello, friends. Welcome back to Cryptonomics. This is going to be a deep dive on Tesla versus BYD, a Chinese EV manufacturer that has just surpassed Tesla as the biggest EV producer in the world. Let's take a look at these two companies and how they compare, and let's see if we can make a decision which one to invest in. If you haven't heard about BYD, it's because you're likely an American. When I was in Europe this past summer, I saw them everywhere, especially in Portugal. Much more common than Tesla. This is what BYD looks like. They make cars, trucks, buses, solar panel batteries. They're fully integrated vertically. Tesla actually outsources their batteries to LG and I think Samsung. Now, both are pretty cool. I really like this supercar by BYD. It's called U9. It is only $150,000. Price of a Corvette, I think, or a Porsche. Let's take a look at their financials. Tesla delivered 484,507 EVs in Q4, beating analysts' expectations of 480,000, and full year deliveries hit 1.81 million. As you can see, Tesla and BYD, Tesla in the green, has been beating BYD for a long time. In Q3, they're neck and neck, and now in Q4, BYD has surpassed Tesla. These are their financials. The financials of the two companies look very similar. It's actually really hard to tell them apart if I didn't label it. One thing to note is that despite BYD also producing different products and having different services, that information was harder to extract from their financial statements. Unlike Tesla, where they break down their auto sales, credits, leasing, energy, and services, as you can see here. Vast majority is auto sales, 20.5 billion out of the 25 billion of revenue. Now, gross profit is 4.5 billion for Tesla. Operating profit after you take out operating expenses is 2.1. But Tesla had $5.8 billion of tax credits that ended up having almost $8 billion of profit. Now, when we look at BYD, very similar, 25 or so billion dollars of revenue. Gross profit is actually better than Tesla's. If you look at Tesla, it is 4.5 and BYD is 5.1. Operating profit 1.87, where Tesla is 2.1. So Tesla is doing a little better, but not far. It's not far off. And then net profit is $8 billion, which is 5.8 billion of tax credits for Tesla, which BYD doesn't have. If you were to take away the tax credits, these are pretty similar companies. Now, given Tesla is more of a tech company, a software company, than a manufacturing company, but as of now, most of their revenue comes from selling cars and manufacturing, which is what BYD does even better. They've been selling under $25,000 car already in Asia, where Tesla plans or hopes to start making one next year. Tesla has arguably saturated the EV market. Their earnings plunged 40% to 71 cents a share, while revenue grew only at 3.5% to $25.2 billion, both missing expectations. This is largely due to ongoing price cuts that have propped up vehicle demand, but at the cost of margins. Tesla's gross margins fell to 17.6% from 17.9% in Q3. Now, Tesla didn't provide much in terms of guidance for deliveries for 2024, other than it's probably going to be lower than 2023. They are becoming more efficient at producing, so their operating expense is going down. But the price cuts are a result of them trying to compete with BYD. Now, I saw an interesting video where Elon was laughing at BYD and Chinese automakers, EV automakers, 5 years ago, saying they're not even close. In a recent statement, Elon is asking Congress to put on trade barriers and tariffs on Chinese EVs because American companies just can't compete. They have come a long way. Now, the interesting comparison here is that while their financials look very similar, Tesla has better net profit, but the gap is narrowing considerably. BYD sells more EVs than Tesla, which has now been labeled the biggest EV maker in the world. Also, BYD in many ways is the EV maker Tesla aspires to be. They make their own batteries, chips, and they sell those batteries to third parties such as Tesla. Tesla has talked about making a $25,000 Tesla, and BYD has already been profitable making less than $25,000 EVs. Though both companies' stocks have been hit recently, they're both the leaders in the field. And perhaps they'll stop the price war with each other and take over the market. Fun fact, Warren Buffett's Berkshire Hathaway has been a longtime investor in BYD. This is one of late Charlie Munger's favorite companies. The company has reduced its ownership from 10% to 5%. That could be largely due to the Chinese government being hostile to foreign investors. Now, an interesting comparison here is the market share or market cap. Tesla is worth about 500 to 600 billion, depending where the shares are. This is well off its peak, almost 50% down from 1 trillion. And that is still far above the set 67 or 70 billion dollars that BYD trades. I would like to ask the question of, is Tesla that produces fewer electric cars and that's less vertically integrated than BYD worth 10 times the market cap of BYD? Much of Tesla's valuation is based on hopium that Tesla will figure out full self-driving and that they will crack the AI and robotics. This could happen, but this is betting on something that hasn't happened yet. What am I doing with this information? Well, since I discovered BYD this past summer, and since BYD has overtaken Tesla as the biggest EV maker in the world, and looking at their very similar financials, I've decided to invest in BYD. Now, I am apprehensive about this decision because investing in the Chinese stocks has been terrible for my portfolio ever since the CCP has been cracking down on their tech companies, really shooting themselves in the foot. I don't believe that you should have to choose Tesla or BYD. So that's why I invested equally in both. I acquired Tesla shares and BYD shares this week and last week in equal proportions, and I will just let them fight it out, and whoever wins, I will be the winner. In investing, you never have to choose between A or B. There's always an option of C and D. C, in my opinion, is invest in both, and D is invest in neither. You don't have to. If it seems like it's out of your depth and not worth it or overvalued, which some have argued Tesla is, you can just step away, stay on the sidelines, and watch it play out. Just grab your popcorn. Because of the similarity in their financials of both making close to $25 billion in revenue and their profits being very similar other than the tax benefits, I chose to go with both. Let me know what you've decided to do with these companies and if you found this video informative. To stay up to date, latest developments on Tesla and BYD, make sure to hit the bell icon and subscribe. Until next time, may the force of compound interest be with you. Peace.
Peace. Peace.